and welcome to June. It's been a while, but our series are still back. And if you have not followed up on chapter 1 to 3 on the Successful Nigerian Entrepreneur series, where we're discussing everything entrepreneur from the lessons of the Nigerian Ministry of Finance, you are missing a lot, I promise. So you want to look back. There are 3 videos that describes 3 different chapters, 3 different ideas, but everything is driving towards one thing: making you a successful entrepreneur in today's market. So do well to look behind, and you're welcome. It's my pleasure to bring you chapter 4, and we will dive straight into it already. So chapter 4 on Successful Nigerian Entrepreneur, you know what it is. I mean, the title of this chapter is Financial Planning and Management. I know you could say, why not just say financial planning? But I promise the title makes a whole lot of sense. Now, financial planning and management, they work hand in hand, and they are key points to your entrepreneurial success. So if you want to succeed in anything, you have to have a strong financial structure, and financial planning and management ensures that you do that. So in the most basic explanation, for instance, you own a farm and you decided what your land would produce on that farmyard is planning. Management will now be everything in between to ensure that your plans for that farm are achieved, to ensure that what you envisioned for that farm comes alive, like the daily work of planting, weeding, watering, pesticides, fertilizers, everything in between is the management. So, I guess you get the illustration. Planning is saying, this is how this will go, this is how I want this to look. Management is saying, okay, because I have this goal, this and this and these are the things that I will put in place. More like the daily processes that leads you to that end point. And money is a terrible master, but it does well as a good servant. So this tells you that if you do not tell your money where to go, it's going to decide and it's going to rule over you. And one day you're going to wake up and there's nothing. So that is why it is highly important for entrepreneurs to decide, plan, and manage finances. That is one key thing. And, there's an analysis that shows that only 20% of small and medium-sized enterprises in Nigeria have access to loans. You can see how small that quantity is compared to people who actually have real startups that really need financing. That is why every money that comes into your hands is not some kind of money that you want to just splash around without having an actual plan for where you need this to go. Remember, when you pave out a path for your money, you are able to be accountable and responsible for every dime that comes in or leaves your business. Quickly, let's dive into what are the key things. So in the key things, we have budgeting, forecasting, and cash flow management. But all of those things compacted have been splitted into simple and comprehensible tips, which are the next thing I'll go into quickly. So on the tips for effective financial planning and management, point number 1, create a budget. Very important. I know you could say, well, this point is already known. Why am I hearing about it again? But you do not just need to create a budget. You need to learn to stick with it. Yeah. So how do you create a budget? Point number 1, you identify your income sources. What is it that brings in money for your business, for your startup? Is it your salary? Is it angel donations? Is it from your savings? Whatever it is, identify your sources of income for that business. 2, List out your expenses, which is categorized in several different parts, but list out your fixed expenses. Things that you already know have a stipulated value. For instance, your shop rent, maybe 150,000 or 700,000. That is a fixed expense. You know it. Budget for that. Your utilities, maybe every month your NEPA bill is 10,000 naira because the shop could probably be in a complex of several other shops and the bill is split. But knowing your fixed expenses goes a long way. Next, you have to know your variable expenses. What are the things that may really not always be in the same price? Maybe like perishable goods your business needs, raw materials for your production. Still budget for them. Have a price range where you know they would fall. So the next point is calculate your profit margin. There's a formula to help you in that calculation. If you want that formula, just type profit margin in the comment section and I'll do a whole tutorial on that. And the next point is to regularly track your expenses and you compare them with your budget. That is very important because many people track expenses, but you don't really actually take time to compare them to your budget. Now, comparing your expenses to your budget helps you to see a need why you must stick to that budget, because for many entrepreneurs there are just so many things that seem like a necessity that are not necessities for your business, especially at the time of inception. So what you don't want to do is you don't want to splash money on things that may seem valuable but are necessarily not valuable. Now, comparing your expenses helps you to know what other miscellaneous thing takes away from your business, so you want to pay attention to that. Now, you need to make necessary adjustments per time to stay on track. Make necessary adjustments per time to stay on track. There are things that would make your budget go beyond you, things that are beyond your control already, like the economy. You cannot really do much about that, but you can move around your own personal business expenses to ensure that you are staying on track and on course. So, yeah, keep that in mind. Now you have to be disciplined. I mean, money, money management. If you've done this, you know what I'm talking about. Money management requires a lot of discipline. There are things that would look like you need them like right now, but you have to be disciplined enough. If you have a budget, stay on course. Again, you have to remember that your finances would play a significant role in the future of that startup that you are trying to build. So you do not want to be caught in a fix where you are doing unnecessarily and being somewhat not careful or not prudent, because that would impact the future of your business later. So you need to be disciplined. Yeah, point number 3 is you forecast your financial performance. From everything that has been happening in your business, you can tell the trajectory of your finances. Now, financial performance forecasting is simply predicting the future of your finance performance based on historical data and market trends. That means you're keeping track on what your business has been doing, the revenue you've been bringing in, the profit margins, and you are forecasting your performance based upon that. So by analyzing your past records, you anticipate potential challenges and you are able to tackle them ahead of time. Now, when you identify potential challenges, you make plans for them. But forecasting financial performance does not only help you identify potential challenges, it helps you prepare for potential opportunities also. So that is highly important. In that way, you would make very informed choices, you manage your resources effectively, and you would optimize strategies that help you to achieve your plans. So, forecast your finances, very, very important. Don't play. So the third point is manage your cash flow effectively. It is a business, so why shouldn't it be managed? Exactly. Now, I find this very, very funny what they said. I find it very funny, but it is actually reality. And this is the statement. It reads, cash is to your business what blood is to your body. Makes a lot of sense because you think about a business that you have to run cashless. Doesn't really make much sense because in the end, there's always a commitment that must be made. Yeah. So cash flow is king. Because it is king, you don't want to play with it. If you play with your cash flow as a startup, you are playing with the future of your business, of your entrepreneurship journey. You do not want to play at all. You should regularly monitor your cash flow. You must forecast the future of your cash flow. Again, it is interlinked with what we said previously, but they are two different things, but closely related. You have to manage every single dime that comes into your business. Now, how do you do that? The question. Okay, point number one is you have to invoice promptly. Take inventory of the products you're receiving and the products that are leaving you. That is highly important. That is the basics we learned in marketing and business studies as bookkeeping. Yeah, so very important. You have to manage receivables by invoicing promptly. So another point is that you have to manage receivables by invoicing promptly. The next point is you must negotiate favorable payment terms with suppliers. So for instance, you are getting a new consignment and you would pay maybe half of it upfront and you'd pay the remaining half after the sales have been successful. You need to be able to bargain for favorable payment schedules because now you do not want to receive a consignment and then you sink in every cash into it and a need comes up and your business is stranded. That is not what a smart entrepreneur does. So you have to be able to negotiate favorable payments for your business at all times. Now you have to manage your inventory effectively. Know what you have, know what is going out, know what is coming in. Bookkeeping. This helps prevent you from understocking or overstocking because a good inventory tells you that this is what we have, we're almost out of this, we're almost running low on this. It helps you stay on track. So you have to be diligent in inventory taking. Highly, highly necessary for the success of your business, especially as a startup. So you have to regularly review and cut your costs always because you do not want to have unnecessary costs. That is bad for a startup because in that way you are going to have lots of wastes, which is not what you are expecting to be doing. You're expecting to be harnessing every resource for the future of your business. Now you have to explore financing options, maybe loans, maybe grants, but you have to find out who and who can I partner with, who and who can I sell this idea to that will buy into us and gives us the opportunity to expand and be bigger than who we are currently. That is very, very important. Now you have to build robust cash reserve for emergency. That is important. Even in the last chapter, I mentioned that you do not want to be a reckless entrepreneur. You do not want to take chances. You do not want to leave your business to chances. That is not a good entrepreneurial mindset because you have to think about every possible losses that could come and you have to cushion it. Now, having robust financing in case of emergency does not only help you in that time of emergency, but it guarantees that your business stays afloat until the times are much better. So you have to think of a contingency plan. Plan your resources, and from your profit margin, save out something from that profit every single time to ensure that, okay, when this goes wrong, I have this to do this for me. Highly important. Now you have to use cash flow tools, anything, applications that could help you manage your resources better, your finance effectively. And then you must seek professional advice, especially if you need it. Now, you have to also remember that no matter what amount comes into your business, if it is poorly managed, your business is already on the verge of failure. Also, you want to explore alternative funding options. We touched on a little bit of that in the point above, but we'll still touch on it a little now. You want to explore every alternative source of funding that is available to you. If it is crowdfunding, if it is invoice financing, if it is venture capitalism, whatever it is that works for you, you have to explore funding. Because again, you do not just want to be a small man, you're looking to grow. Therefore, you do not play with partnerships. We spoke about this in chapter 2, so you need partnerships to grow, so you have to think about alternative sources of funding, though not every alternative source of funding is actually a room for partnership, but some are, luckily. So you explore the kind of funding options that do not crumble your growth. Yeah, keep that in mind. So you need to keep financial records. I mean, I've been emphasizing on bookkeeping, bookkeeping, bookkeeping. That is because it is highly, highly, highly important that you are keeping records, good financial records. Have an inventory, have your price list, and have your sales list. Know what comes in, know what goes out. That helps you to forecast your finance more effectively. It is crucial to separate your personal business from your entrepreneurship business. I mean, personal business. You get what I'm saying. It is highly important to put personal savings and personal income separately from your business income and savings, because you do not want to get in the way of the other. So if you're guilty of that, I know small entrepreneurs, don't do that. Don't do that. So have a business finance set aside and have a business account for that. Then have your own personal for whatever it is that is personal to you. And please, if possible, at the beginning of your business, plunge back most of your profits into the business, because again, think about the future of your business. I mean, I heard Mr. Aliko on one interview, very lovely. He said many entrepreneurs fail because they eat up the proceeds of their business from earlier. And he was telling us about how he invested everything he was making in the business back into the business until the business is strong enough to stand. That is actually a sacrifice that a good entrepreneur is willing to make. So you need to be prudent, and you need to learn to cut away excesses. Now, this explanation is not a reason for you to starve or make your family starve, but if that dream is worth pursuing, then you would have to make some sacrifices along the way to ensure that what you have envisioned comes alive. And that is one of the ways to do that. Yes, sir. Stay with that. And you should categorize your expenses. I spoke about fixed expenses and variable expenses. That is also highly very important. You have to also reconcile your accounts monthly. Look at it. Okay, our products, 70 units of our products were bought via transfer. You should cross check. Don't only see it on the book, cross check. The money in the account, is it tallying with 70 units of your products that were sold? And I mean, at the beginning, for small businesses, you may be the only one doing all of this, and it might be tedious, but trust me, you have to learn to put in the work for where you are headed to. And then, if you feel your business is good enough and you can employ labor, fine. But most times we even overlook the people we have around us that could actually help. For a small entrepreneur, I mean, if you have your brother or your sister that is trustworthy and prudent with money, they could actually double down to help you with that. Or you could do that while they help supervise the smooth running of your business. So the key point is that you have to be on top of your finances. If not, yeah. Final point is that you have to invest. You have to invest a significant amount of your profit into a profitable investment. And you have to be a smart money person, because you don't just want to keep money somewhere in the bank lying down. No. Put back the percentage of your profit that is not going back into your business that you're saving up should be put into a profitable investment. Mind you, a profitable investment is not one that says invest 50k today, tomorrow to be 700k if you bring 5 people and they invest 50k. No, or way past that already. There are platforms that ensure that your money is put into good use, so make use of those and ensure that you're winning in your journey. Thank you so much for joining us for the fourth chapter, and there is more updates coming up on this channel, so do well to hit the subscribe button, hit the bell below, and leave a comment. Thumbs up, it helps more people see my content. Thank you, and have a good one.